guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for the week of August 12th, 2024. Today we're going to talk about where we are in the S&P 500 year to date, what it looks like moving forward. We're going to touch on some of the economic data that came out last week and what's coming out this week. We're going to go through the different sectors and their performance. And then we're going to jump into the live trades on the option trading platform. Before we get started, be sure and hit the like and subscribe buttons down below. Also be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. There's also a paid course if you want to dig into options a little bit deeper. Use the link below and open an account with Moomoo. You can get 8.1% on uninvested cash and up to 15 free stocks. You also get the free charting software. It's a zero commission online platform brokerage. Disclaimer, I'm not a financial planner and I'm not recommending trades. Please do your own research, and if you're new or learning options, I recommend you start small. All right, guys, we started the week last week at 53.46, and actually if you look over here, and then we dropped down the beginning of the week, and then we ended up at 53.44, so completely flat for the week. So we're still up 12% on the year, and if we look at the yearly chart, you can see that we started the year at 47.43. Our forward PE is now 20, so we're above the 10-year average of 17.8. And as far as the economic calendar, let's look at last week. We had Thursday of last week, we had jobless claims come in at 233,000, 240,000 was expected. So that actually was better, and why, the market dropped down, but then it moved up right away. So it started to move up on Monday morning. And then this week, we've got Tuesday, we've got PPI coming out. Core PPI 0.2 is expected, and then core CPI 0.2% expected on Wednesday. And these are 8:30 in the morning, so and that's so 5:30 Pacific time where I'm at, and that's before the market opens. So the market opens at 9:30 on the East Coast. So if we look at interest rates and where they are, that's the big news. There's a so we're at 5.25 to 5.5 right now. There's a 51% chance of a quarter point cut to 5 to 5.25, and a 49% of chance of a half point cut. So there's basically 100% chance there's going to be a cut in September, and that's September 18th. So we know the Fed is going to cut. It's either going to be a quarter or a half, most likely. And then more cuts in November, down to 4.75 and to 5, 48% chance. And if they don't cut the other quarter in September, it looks like it's coming in November. Oh, there we go. 4.75, and then down to 4.5. Wow. And then in December, just continued cuts. So we're looking to for the end of the year for some rate cuts. So we know that that's probably coming. If we look at the earnings insight report, we look at earnings growth for Q2, and we can see that the growth rate is 10.8%. So that's pretty good. And here's that 12-month PE of 20.2. And then if we move down and look forward, let me see. Let me find the page. I think it's page 16. There we go. So if we look, Q3, we're anticipating earnings growth of 5.4 and 4.9%. So that is actually pretty good, pretty healthy. And then for calendar year 2024, 10.2% earnings growth and 5.1 revenue growth. So still good for the end of this year. So that's looking good. And then for calendar year 25, looks good going ahead as well, 15% and 6%. So there's all this talk of recession right now, and that has got the fear and greed index down to 24. So, I don't want to be all in at this point because there are some geopolitical issues going on, wars in Ukraine right now, and There's talk. The biggest thing is the talk of the potential recession and the Psalms rule with the unemployment situation. You can look that one up, but it's pretty much guaranteeing a recession if you go and abide by that Psalms rule. So, but I'm not. This is when I want to be in the market, at least half or more, and then wait for the uptick. So with that, let's jump into some of the trades that we have on the platform. The first one is AMD, and AMD I like right now. Uh, Actually, you know what? We had Airbnb and it dropped pretty big. So I'm just going to tell you, I closed out my Airbnb. I still like it, but what concerned me on their earnings was they missed earnings, and you can see where they dropped big. But the biggest news was, because of the economy, they guided lower. So they'll probably beat it next time. Now's not a bad time to throw in some puts, a put credit spread, or sell puts. They do have a huge amount of free cash flow, so I may get back in, but IVR dropped. They're down. The guidance going forward, there's money coming out of it, so that's why I jumped out. But I'm going to jump back in at the first sign that that's going to tick up. So I'm going to keep my eyes on it, and I'll let you guys know. AMD 130 to 155. I re-centered my puts because of the big drop in technology stocks. And oh, we didn't talk about the different sectors. Let's jump into that really quickly. Um, so if we look at the 5 days last week, we can see materials was down, utilities was down, and consumer discretionary. Tech was actually pretty flat, and year to date, tech's way down to 6%. It was up huge, over 15%. We've still got utilities way up and communication services. All right, so with that, let's jump back in, and there's AMD. I've got the 130, 155. If we go to the trade curve, and this is the Tastytrade platform. I use this and Mumu, but you can see now I've moved my I'm $20 wide on the put side and $20 wide on the call side, and we're right in the middle of that profit range. So I just kind of recentered my 130, and we've got 661 left in intrinsic to collect. Amazon, I'm still long. I'm 165, 155. Uh, as long as we stay above that 165, we get full uh, premium, $283 left in Amazon, and I'm in September. In all these positions, I'm pretty much in September, but I'm just long at this level. On 8-1, they beat earnings growth, but they missed on revenue. And it was like 148 billion versus 149 billion, and they're the king of AI, so I'm not gonna not be in Amazon right now. Another chip stock, Avago, which is Broadcom, 155. I'm below. Everything moved down in tech, we know, but again, this is an AI stock. Put credit spread. I love Broadcom going forward. It's thought of highly. That my target's 180. I think everybody's got it a buy. The target price actually doesn't show on this screen. Let's see if we can get it. No, it's still not showing. But the target's 180 that they have as well. Coinbase, it actually moved up. Crypto moved up. So again, put credit spread. I like Coinbase. Going forward, 180, 170. And the Trump, if he gets in, that's good for crypto. Either way, I think the ETFs are look good going forward because they've incorporated crypto now, so it looks like it's staying probably no matter who's in the office, the White House. So I'm gonna stay long and buy the dips because it does move around and it trades like crypto. DraftKings, I've got a poor man's covered call. We've been doing really well in DraftKings, and just over the last 35 days, even with the down move, uh, we've made $436 in 30 days, and I think over 3 grand, yeah, close to 3 grand in the last year. But I just trade DraftKings. I'll sell a call and do a poor man's covered call. I'll have a leaps option, the 30 call that we bought, and then we'll sell a 35 call against it. And then gold, we've got a iron condor on the 217, 212 put spread and the 225, 230. So we just want to stay in between that range, which we are, and it's been trading between that range pretty consistently. You can see in that range, we're at the top of it right now, up near 225. But I like having this trade on because IVR is high, 69, so we can collect good premium. I love the small caps because those interest rate cuts are coming. So 200, 190 put credit spread. We collect, we've got $220 left to collect in the next 40 days as long as we stay above this line. And we've already had a big drop in this, and it's at the bottom end of the channel. So I like the position that we have on in the Russell right now, small caps. And again, small caps will do well. They won't do well during a recession, but again, I'm not super concerned about that. And if it happens, it happens. We just roll out to the next month and wait it out until it comes back. So we're not too big in this. We probably want to wait before we go all in before, and when we definitely know that we're out of this recession, or maybe we go into it and then we just wait and roll. Micron, I'm doing a video on this one, but it's a poor man's covered call, and to me, this is a no-brainer. It's down, uh, you know, half off its all-time highs just last month, and it's way oversold. So I'm going long with a leaps option, and then I'm selling calls against it until it comes back. So poor man's covered call, and I think we'll make bank on that. But keep your eyes out for the video. Um, 590, 700, or 580, 590 put credit spread, and 700, 710 for an iron condor in. Actually, I've got two of them on in Netflix, and we're at 633, 40 days left. We've got $656 that we're going to collect as long as it stays within that range. And it's been trading within that range pretty consistently. You can look right here to the bottom end of the channel. But I love Netflix. We've done really well in it. Uh, over time. I actually closed out my Google position. And the reason, I'm going back, uh, I skipped over that one, but I couldn't go 1/3 the width of the strikes. So what I mean by that, let me go back to that one. I'll come back to Netflix. But the reason why I closed out Google, if you look to put this on and you go September, and if we go, down to the 20 delta, even the 27 delta, so that gives us a 73% chance. If we go $10 wide, we can only collect $1.47. On $10 wide, I want to collect $3. I want to collect a third. On $5 wide, I want to collect $1.67. So even though the IVR is up 39, for some reason we can't collect that premium. They're just not priced that well. So that's the reason I closed out. It did drop. I still think it's the king Google of search, and their ad revenue has been down. All the ad revenue, Pinterest, Snap, all those are the first ones cut during a recession. So I'm careful on Google, but I'm going to jump back in as soon as it starts to kick up and as soon as there's more premium in the options. Okay. Next to Netflix, again, we talked about that. We're in that range. I love it. Bottom end of the range, we can collect huge premium. And like I said, we've done really well in Netflix. We've done just in the last 30 days, almost $300 in Netflix. And over the last year, we've done real well as well. 105.95 in Nvidia. I've got two put credit spreads on. They've got earnings coming up on 8/28, so before these expirations. So that's going to be a big one. But they've already had a big drop. I'm not concerned. I mean, worst case, if there's any issue and they do drop, I don't think it's going to drop too much further. And that's okay. I'll just keep rolling out as it comes up because it will come up. But we're still in the profit zone right now, and we've just hit lows. So again, that's that fear and greed index. But AI is going to do well. The big concern with AI is whether companies that are investing in it, whether it's producing for them right off the bat. But hey, it's going to take time like anything. Poor man's covered call in Palantir. Same situation. It's a low priced stock. Uh, so You know what? I'm going to talk about ServiceNow too. I skipped that one. I closed it out. You're going to wonder why, but it moved up and we did really well. So in the last 30 days, I love ServiceNow, but in the last 30 days, we made $800. So I'm not going to skip over that one. Of course, I'm going to show you that one. But you can see the move up. And then even though IVR is at, so 812, my target is higher, but with the tech thing going on and some chip stocks coming out, I'm just going to wait for a drop back down in ServiceNow. Then I'm going to get long again. So, but I love that stock, but it's not super liquid. So that's the kind of the reason I'm out. And I want to have some dry powder, some cash to jump in should there be another drop. Okay, Palantir. It's up at the top end of the range right now, 30. So, that's what I've been doing is just selling calls. I've got a 29 call against it. So when there's a drop back down, I'll close out the call, collect the premium there, and then I'll continue to make money as it moves up on the put side, or actually on the long side, which is a deep in the money call, Palantir. So again, this is a poor man's covered call. Keep your eyes out for the video I'm going to do on MU because I'm putting another one of those on in Micron here shortly. And you can see in just in the last 30 days, 357 bucks we've made in Palantir. So we've kind of been killing it. SoFi, I don't know why this stock does not move, no matter what happens. But they're long-term going to do really well. And I'm going to stay long with my, deep in the money calls over a year out. At some point, it's going to pay off. Sound, I'm going to skip over that one. It's a hard to borrow, small SoundHound, high flyer AI audio stock. TLT and TMF, I've got those because those interest rates are coming. They've actually had a little bit of a move up, but the bonds will these should move up over time as these interest rates start to come. So I'm going to stay long TLT and TMF. TMF is a triple leveraged bond. It's basically triple TLT. And there's a lot of money going into these right now with the interest rates coming. So a lot of institutional money coming in. So that's why I've got those on. And also to balance out this option trading portfolio. Ulta, it's just way down. And I've got two put credit spreads on, and actually I added the call side. Yeah, I did that last week just to have both sides on, and I kind of recentered down my put to the where are we at on the put side? 300, 290 put credit spread and a 385, 395 call. So we collect 473 as long as we're within that profit zone, which we are right now. And let's see, the last one that we've got on is ExxonMobil, 105 to 120. This one's been great for us continually, and it's been trading in that range between, let's see, down here at about 110 to 123. But we're right in that profit range. We're at the top end of it at 118 right now, so I could move my puts up. I might do that Monday. 105, yeah, I could just roll. I could right click here and I could roll that strike up to the 110 and collect another 52 bucks. I could go up to the 115 and collect $172, but I don't want to go that high. But yep, that's what we've got on. We've got some earnings coming out next week. Let's see where we are with earnings. All earnings, you can sort. We've got Home Depot. Let's put it on the chart. Cisco, Walmart, and Palo Alto Networks on the 19th. So some good earnings trades coming up. All right, guys, download the free options workshop in the link below. Remember to hit like and subscribe. Join Mumu. Get your 15 free stocks. Leave a comment. Ask a question. I answer everyone. Thanks for watching. I'll see you in the next video.